Hello everyone, I hope you guys are having a wonderful day, making some really good trades, and yep, let's just get into it. And again, today, a bit of a pause day in the markets after so much selling. After all, we did get a massive red candle today. Markets basically chopping sideways, gathering their emotions, collecting their thoughts after, panic selling yesterday. And again, Bitcoin back to 20,154. Let's take a look at market cipher on the daily time frame. We could see that we did get a red dot today with a 16 and a -5. Now we have a 17 and a -5. We do have red money flow, and that view up has already cut in, so let's pay attention. Is this the beginning of some more downside, or is this, are we just ranging? After all, it looks like we are trapped once again in a bit of a range. I got a bit of a messy chart right now. Let's get a clean one and I'll show you guys what I'm talking about. Maybe we'll even delete this trend line right here. And again, looks like we are trapped in this range, and we could potentially maybe be trapped in this range for quite a bit of time before we get a significant move either to the upside or to the downside, right? As you can see, every time we come back down to around 18,487, we tend to bounce around that area, start to come back up, and we're going to start to see some resistance once we run into this area right here. There we go. We just put it right at the candle closes. You can see we only have wicks up here, and it basically around 24,381 we have some resistance. Now if we do break this level right here, then you can expect some significant more downside, or I've outlined before, we could potentially maybe be headed to 12,000, 13,000. Obviously my lower end target is around 7,934, and I know it sounds crazy to think about a $7,934 Bitcoin, but again, we might even go down lower than that, right? We have these green vector candles. Where are they? Right here. We have these vector candles on the weekly time frame that have yet to be recovered, and we actually just did recover a weekly candle right here. This big green vector that we created, we actually just recovered it now. But we have some green vectors all the way down here around 13,000, and one down here at 5,134. Now, moving on. I want to address the issue that people keep tweeting, that the S&P looks like the 2008 financial crisis. It's an exact replica, right? It's a one-to-one match essentially. So let's take a look. Let's zoom in back to 2008. Maybe we'll get on the weekly time frame so we get a bit of a better picture. There we go. The 2008 financial crisis. Now we'll just zoom in. We'll do a copy of the charts, and then we'll just paste it on where we are today. Let's copy these bar patterns, and then you know what? That should be good, right? That should be good. Now let's drag it all the way over here to 2020. Well, sorry, 2022. I almost said the word 2021. But yeah, I actually have some good news for you guys today too. That job that we were looking to get, I actually did get it, so that's going to benefit the Discord significantly. So, woo, excited for that, guys. Some pretty good news overall. And there we go. Now people are starting to say this is a one-to-one match, and we're going to have a big dump towards the downside. And again, anything is possible. There we go. That's a little bit better. We can just zoom it in right here, something like that. You could also stretch it out to make it fit a little bit better. Again, this obviously needs a little bit of adjusting because of the price difference down there. But overall, you guys get the gist of it. This is essentially looks like the 2008 financial crisis, and now we're gonna get another leg down, make a lower low, and then we're gonna get a bounce around the 2020 highs before the COVID crash, and then we're gonna have a massive drop towards the downside. At which point we're gonna go, down to the lows of 2008, something like that. But again, here's an image where actually just knew that you could add images to TradingView that we could probably all benefit from looking at. Now this is, you can take a look at the bullish case and the bearish case, because right now this trend, this pattern right here, the one in the red, is basically where we are right now in 2022. And obviously we did pull back a little bit now, so this one's a little bit outdated, but still you get it. Right now, this looks like the 2008 financial crisis, right? And there's a 91% correlation, and there's a big drop after that. And this is the bear. This is for the bears, right? And then you have the 1973 one, where it has an 85% correlation. And you can see after that we did have a big drop as well, a big recession. And again, for the bulls, right? Looks like right now we are getting a big bounce, and we're going to come back down, form a W pattern, right? Form a W, a bottom like this. Or some people are saying we're going to form a bottom, and then we're going to go back to new all-time highs, right? And then again, for 2015 for 2022, an 86% correlation. Again, this one is a bit of a larger W pattern, something like this. Obviously, it looks like it failed now because you would have to have done something like that, rally, come back down, and then form a bit of a W pattern. But again, maybe we are going to come back up. Who knows? But again, the Fed's got the FOMC meeting coming up next week. For me, you guys know I am bearish, right? And there is a strong correlation for 2008, but I do see the bullish case as well, right? You have to see both sides of the trade, right? You can't always be focused on one side because you got to see both. You can't just see one and then be like, that's it. It's only gonna go one direction, because playing like that, you're gonna get wrecked in your trades eventually. So just want to clear the air here for some people who think I'm a uber bear. Yeah, I am bearish, but I have my reasons for that, and I think that the Fed is doing the wrong thing, and the Biden administration is really messing things up. And for some people as well that want to see why oil is actually coming down right now, you can see that this is, let's increase the picture size, the strategic petroleum reserves, right? We can see that they've always had around 750 million barrels of oil around this area. And once we got to around 2019, they started to sell some. But in 2020, right, it's our 2022 right now, where we are at, they are absolutely just, emptying the reserves at the moment, flooding the market with oil, right? Trying to bring the price down artificially. Oh, I can see that the candlesticks are appearing over my image when I do that. But yeah, this is why the price of oil is coming down. They are essentially flooding the market. We'll do this, or flooding the market with oil, reducing the demand by oversupplying everyone. But eventually, this is like playing a game with borrowed time, right? Eventually they're gonna run out of it, and once they're out, eventually they're gonna have to start to top up the strategic petroleum reserve, because they need oil in there just in case. And then that's when the price of oil is going to start skyrocketing like crazy, because now we will still have extreme demand, and on top of that, there's going to be the strategic petroleum reserve to refill back up. So it's a short-term resolution for a long-term problem, and again, it's not going to work. Now let's keep going. Let's get back on Bitcoin. Let's focus back up right here, and let's do some analysis on some altcoins. Let's take a look at our Solana trade right now, because we are in a short position on Solana. I gave you guys a bit of an update on that. And right now we are in the money after this big dump on Solana. Again, if it gets around $31.95, I would potentially, consider to take some profits around there. But let's just see how the market plays out. Tomorrow we do have some news coming out. It's going to be the retail sales numbers. So basically going to show how the consumer is doing, if they're spending more, companies are selling more, stuff like that. It's going to give us an indication of how the economy is performing as well. So that's going to be interesting to see. We can see that natural gas is surging once again. Again, that's why we take our profits. We close our shorts. Good job on Kenny bagging some big wins on KOLD once again, reshorting natural gas. But again, we are headed to the winter times. After all, winter is coming. Winter is coming. And once, oops, what did I do there? Once the demand for natural gas starts to surge, you could potentially see the price surge as well. And then you really have an energy crisis in Europe, and not only in Europe, potentially in the US and Canada as well. So, get ready for some tough times, guys. Those energy costs are not only going to affect Europe, they could potentially start coming to North America as well. Again, none of this is financial advice. This is just my opinions on the market. Let's keep going. Right now, Bitcoin chopping sideways, finding some support here. Once again, we could be coming down once more to test 19,500, 19,800, which is basically the 2017 all-time high, before maybe getting a bit of a bounce here. But again, things are looking pretty grim after that CPI data released, because now markets are starting to repricing in a potential 100 basis points rate hike. You know, the markets were rallying into expectations that the CPI was going to be lower than expected, and it was higher than expected. So you can see the complete shift in the sentiment right there right away. And on top of that, you know, Jim Cramer telling everyone to buy and everything's okay is also a very bearish indicator, and that he still likes tech stocks and he's not going to abandon them anytime soon. Is kind of funny. Let's keep going. We have a bit of a trade on SHIB. Again, this one we are slightly out of the money, but I will add to my position if we do get to our next level. Let's take a look right here where Shiba is. Again, if SHIB gets to this target around this area, I would potentially consider adding to my position on SHIB. But again, this is just a short-term trade on SHIB, nothing too crazy. Obviously, we have a sizable amount right now, but we can always allocate more because we practice proper risk management. So if it goes against us, we could always add a little bit more and double up on our position size. Moving on, let's take a look at gold and silver. I'm going back and forth between altcoins and commodities today. Something's wrong with me. Gold taking a bit of a dump once again today, you know, not basically just, you know, bleeding towards the downside. If we come back around 1679, I would potentially be interested in adding to my position on gold. A bit of a long on PAXG right now. If we could bounce up, I'll be looking around 1774 for a major resistance area for gold, at which point we could potentially short gold and catch a big drop down towards the downside around 1551. But again, for that to happen, you really need to see the DXY surging, and oh boy, has it been surging. Yesterday's massive green candle, today a bit of a down day, so a bit of an update for the markets as well if the DXY pulls back. But if the DXY keeps going towards the upside with the core retail sales numbers affecting it tomorrow, then, you know, you're going to see that DXY go up, you're going to see the markets go down, you're going to see Bitcoin go down as well. But yeah, you guys know where I stand now. Again, I see both sides of the trade all the time. And something that's funny too is that we've been doing some research in the Discord. Every time we dump into the CPI, we pump after. Every time we go sideways into the CPI, we dump after. Every time we dump, you get a pump, and now if you get a pump, you're gonna get a dump, right? It's something that I was anticipating in advance. Something like here, right here, when we go sideways, a little bit of chop sideways here, you dump towards the downside. I always take into account the day before, right? If we dump, or not, you know, not the entire trend, but overall, when you dump into it, you pump afterwards. So that's quite interesting to see as well. And now, you know, major support as well. You got that 300 day or that 300 weekly at 17,500, and you got that 400 weekly at 13,324, and you got that 500 weekly at $10,695. So it's not like we don't have massive supports waiting for us down here. You know, once we touch these levels, I do expect significant bounces, but it all depends on the current market conditions that we are in. You know, if you see the S&P 500 tanking 5 to 10%, we might blow past these supports like it's nothing. Anyways, guys, thanks for listening. You guys are awesome. If you guys want to join the Discord, see all my trades, the link is in the description. And if you want to sign up for Big Get Trading and help to support the channel, the link is also in the description. You guys can get up to $4,163 in bonuses. Love you guys. Peace.